Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Midcap Radar. The market is up 15 points, which is not a bad outcome given the fact that at one point it was looking like it is selling off. It was down 10 points. You see those two sort of down ticks that we saw, and then both got bought into. So, I mean, it's up and up for the week so far. Almost 0.9% in the first 2 days of this week. Tomorrow is a holiday, and then we come back for the last 2 days. Holiday shortened week, the second one running. The Sensex is up a little bit as well, but I mean largely flat. And after the run-up that we've seen, both in large and mid-cap part of the market last few weeks, I think some rest around here would not be unadvisable, as they would say. But for now, it's looking pretty okay. With me is my colleague Sumaira Abdi. Hi, Sumaira.
Hi, Prashant. Good afternoon to you. And, you know, globally as well, it's looking good because the S&P is actually on track for its biggest bull run in history. They've completed, what, 3,400 some odd days. And as of tomorrow, they would complete the longest bull run in history. That's
the headlines for you. Let's bring in Ashwani, as always, on the top of the show to give some perspective on trade right now. Ashwani, afternoon. I mean, your reading of the screen so far.
So far it's sideways and I don't think we are making any sort of headway on either side. But a good outcome would be that we stay in this 11,500, 600 zone and do some amount of consolidation. Financials have corrected today. So possibly Thursday being an expiry, you know, you could find some amount of buying which comes on later on today itself. Overall, just sideways market, very narrow range. So the idea should be from here, instead of trying to buy all dips, try to do things around yesterday's low and yesterday's high, because the market is likely to respect those sort of sideways boundaries. Individual stocks, India Cement is a buy with a stop of 118, target of 130. VIP Industries a buy with a stop of 590, target of 620. And IndusInd Bank is a sell with a stop of 1985, target of 1930.
Okay. Ashwani, any thoughts on something like a Tata Motors? Is it beginning a move higher? Is it taking out some very near-term kind of resistances? Had a big day yesterday. It's up about 1 1/4 and didn't sell off while the market was looking weak a couple hours back.
See, what I have heard is that, you know, Tata Sons is buying. So if, you know, Tata Sons comes out to buy, you don't expect shorts to hang around. So a lot of it is, you know, short covering. And still the 200-day moving average is at 350. Now, this is not going to take it to 350. Probably some good news needs to happen. But the sense is that immediate term, 250 seems to be a bottom. And now we need to see how far it can go. Things, you know, can and do get to the 200-day average because, you know, a good result, some new launch, etc. makes that happen. But I don't think it's really bottom till, you know, you start to get good car sales numbers.
DLF, Ashwani, is seeing a 3% drop. I mean, it came up nicely from the 185 kind of levels.
DLF is basically nothing type stock, 170 to 270. Now this 200-day moving average is about 220. So that's where it found resistance. If you have to, you know, buy real estate stocks, then, you know, those Bangalore type stocks, Sobha, you know, Godrej Properties, etc. Those are much better stocks. This is basically, you know, sideways range trading up and down.
Did you put out a trade on CESC, Ashwani? I mean, it's a big bar today, so far, 8%.
Yeah, CESC again, you know, 880 downside, 1180, 1200 upside. So it's probably started an excursion towards that upper end of the range. So probably you have about 100, 150 points on the upside.
All right. On CESC, also the fundamental news is that the street is awaiting approval from the West Bengal electricity regulator for the demerger. I think Anisha has been telling us about it, and perhaps the hope is building up that it could be coming through. Ashwani, thanks very much for that. Let's also get into market opinion from Arvind Sanger of Geosphere Capital Management. Earlier today, he of course is expecting the mid-caps to start participating in the rally once again. Adds that political uncertainty remains the key headwind for the market.
Notwithstanding modest weakening in the rupee and the political uncertainty before an election year, the economic fundamentals from a bottom-up standpoint are very solid. The mid-caps are also riding the wave of good economic fundamentals. So, again, the global risks notwithstanding, and I think the global risks, we have lived through some of the fears. Global trade war, that fear seems to be somewhat receding. It doesn't look like that's about to break out in a big way. And Fed rate hikes, I think the market's gotten used to the fact that the US Fed is on a steady rate improvement cycle, but is not looking to do anything dramatic that'll cause liquidity to dry up. Some of the export-oriented auto parts companies are certainly benefiting from a weaker rupee. The IT names obviously are benefiting from weaker rupee, but the economic fundamentals domestically, there were some fears about what's going on in the CV market because of certain regulatory changes. But I think the CV market seems in good shape. I think the domestic auto market seems in good shape. Some of the banks, laggard banks like ICICI Bank, have been huge winners as people are getting past the concerns about the leadership issue and looking at the fact that economic fundamentals are improving and the bad debt cycle, whether it's for some of the PSU banks or for some of the lagging private sector banks are behind us. So I think the financial sector, there are some of the laggards that look quite interesting in that space too. Some of the emerging themes, even things like real estate, which have lagged, that's where some of the values may lie because the cycles are just beginning. If you look at the headwinds for the market, then the political uncertainty leading up to the elections, which for the Lok Sabha, which I guess could be held anytime between later this year and May of next year, and then global cues on trade war and other things that could upset the apple cart. So those are things. But India specific, I think the two things to worry about are the elections and the rupee and the current account deficit.
The market's looking okay with about a 16-17 odd point gain on the Nifty. Let's take stock of the rainfall situation as far as the whole country is concerned. Latest data from the IMD actually shows that overall rain deficiency stands at about 8% or so. Mr. M. Mahapatra is with the IMD and he's joining us right now on a phone line. Mr. Mahapatra, thanks very much for your time. I mean, this is an improvement over the previous week. I think deficiency was about 12 or 13% or so. Could you tell us what has changed, sir?
Yeah, you correctly told that there has been significant improvement in rainfall activity for the country as a whole during the last 1 week. And at present, it is 8% deficient from the long period average. Earlier, it was minus 12 to 13% previous week. So it is mainly because of the development of the low-pressure systems over Bay of Bengal consecutively. The first low-pressure system developed on 7th, followed by 13th one. Then again on 19th, we had another low-pressure systems. Because of this, central part of the country and peninsular India are getting good rainfall activity, and it has made off the deficiency.
Okay. I mean, the big deficiency is east and northeast, right? I mean, I think 28%.
Yes. Continuously, the northeastern states are having the deficient rainfall, most deficient rainfall, and adjoining Bihar and Jharkhand also have the deficient rainfall so far. But Bihar and Jharkhand in between, they have made up and again it has become deficient, but northeastern states are continuing deficient. But however, if you look at the normal rainfall for the northeastern states, it is quite high. So therefore, the deficiency in the northeastern states may not have so much adverse impact compared to the plain areas in the country.
Mm-hmm. In terms of reservoirs, etc., Mr. Mahapatra, I mean, overall, what is the situation?
Yeah, as far as reservoirs are concerned, I think they're in a good state because of the good rainfall activity so far. If you look at out of 36 metropolitan subdivisions, only 11 subdivisions are deficient, otherwise remaining are normal or excess rainfall.
Just very briefly, I mean, qualitatively, what is the impact? Are the rains and the way they are progressing acting as a sort of are they helping cropping, or are they sort of in many areas harming? I mean, standing crops or sowing, etc. I mean, what's the how is it panning out with regards to crops across the country?
If you look at the rainfall distribution, it has been quite homogeneous in nature, and only one subdivision, that is Kerala, has received excess rainfall, and it has led to the flood-like situations in the past, devastating flood. You have seen it. Otherwise, there is no such major flood, and hence and the crops are not affected due to the floods. And if you look at the sowing pattern, yes, it is near about the normal.
Just one last question with you touched upon Kerala. Any specific forecasts there near term, Mr. Mahapatra?
Yeah, if you just look at the rainfall activity over Kerala has decreased during past 3 days, and there is no heavy rainfall activity. And our prediction goes that for next 5 days, we are not expecting heavy rainfall over Kerala. And hence, this reduced rainfall activity will help in relief and rescue operations.
Mr. Mahapatra, thank you very much. Good to hear that, especially the last bit with regards to Kerala. Appreciate you joining in with that quick update. So there is improvement as far as the rainfall situation, overall rainfall situation is concerned. And of course, there are some parts who are hoping that rains decrease, and they are decreasing, at least the quantum, as Mr. Mahapatra pointed out, over Kerala. But Sumaira, we've got stocks moving around.
Yeah, actually, and there's also news flow coming through on Bhushan Steel. So after arresting the former promoter, top sources in the SFIO, or the Serious Fraud Investigation Office, claim that the amount of fraud in the case can jump much higher, and that they've found crucial evidence to this very effect. Utkarsh Chaturvedi, our correspondent, joins in with more. Utkarsh.
2 to 3 major pointers coming out from the initial investigation by SFIO in the Bhushan Steel case. Now, what our sources indicate us is that the amount of fraud, the amount which the ex-promoters are accused of siphoning off, which currently stands at 2,000 crore rupees, can go up to 7,000 to 8,000 crore rupees, which the initial investigation has revealed. Now, where all has the money gone in? Now, our sources indicate that the promoters used to reinvest money from the bank loan to the company. So the money which was siphoned off came back to the company in the form of a promoter stake. Now, around 100 shell companies, trust and investment instruments were used to siphon off money and get them back in the company. What our sources also indicate us is that promoters have divulged money in buying properties, expensive cars, from the bank loans which were given to run the company. Now, these are initial investigations by SFIO. SFIO at this point of time is looking for more documents, more detail on the money trail, and will look to seize and attach the assets where the money has been divulged into.
Okay, I think the bail application for Mr. Singhal is being heard today. Just FYI, he was arrested, about 2 weeks ago. Utkarsh, thanks very much for that. 13 or 14 points on the Nifty. With that, we take another very quick break here.
The market pretty flat, but individual stocks are seeing quite a day, and amongst them is CESC. It's seeing an 8% up move, and Anisha is here to tell us what's the buzz. Anisha, over to you.
For that, well, yes, the buzz is that the company might be getting the WERC approval for demerger. But as of now, the update that I've got from analysts as well as sources inside the company is, as of now, they have not received the WERC approval for demerger. But yes, that is expected any time now. Whether it's a day or a month, we do not know. But that is one thing that the street is watching out for. Other than that, the expectation is that maybe there could be some development around the Chandapur plant, which was a loss-making unit, but it was expected to get some PPAs soon. Because other than that, the demerger is the only trigger for the stock. Remember, it was announced last year in the month of May, and the expectation was that the fresh listing of the 4 companies will happen by the quarter 4 FY18. It has already been delayed by a couple of quarters. It has received all the other approvals, whether it is shareholder or NCLT, etc. Only this WERC approval is awaited for, and once that happens, the company will be able to go ahead with its demerger plan. Remember, just a few days ago, the company did seek SEBI approval to extend the AGM. 3 more months, so maybe the company is just waiting by to get this approval and get the demerger process going before they hold the AGM as well. Now, for today, that's the only update, that maybe that is what Street is expecting, but it hasn't happened as of yet. Back to you.
Okay, the stock's excited. Anisha, thanks very much. Appreciate you joining in with those details. Let's talk about a few other names as well. And this time, stocks where we've got sell-side brokers coming in and commenting one way or the other. Some are actually moving up with recommendations. Tech Mahindra is a case in point. Sonal is standing by with the entire list. Sonal.
I have a long list, and I'll start with why we are watching for Cummins in Tata Motors and also Maruti. That is because Citi has changed its top picks in its strategy, and they have replaced Tata Motors with Maruti in the large cap picks and have added Cummins and L&T Finance into the mid cap picks. Credit Suisse has initiated on Avenue Supermass. They have an underperform rating with a target price of 1,150 rupees per share. They think that the valuations are factoring in a bull case scenario, but that is something that they are not able to see in the margin of safety, which is at the lower levels. Also, that the company is opening stores outside its core markets, and that could put some pressure on its margins. UBS has written on Tata Motors. They have a neutral rating on the stock, but they've cut the target price to 280 rupees from 370 rupees per share. JLR is something that is concerning, and they think that balance sheet continues to re-leverage, but yeah, they're not very positive on the stock. Macquarie has written on metals and mining sector. They think that the demand environment is very supportive. Global trends are looking good, but trade war and China deleveraging are the two key points which are like headwinds for this particular sector. They are their top picks are Hindalco, Coal India, Tata Steel and Power Grid. However, they have a neutral rating on Hindustan Zinc. Macquarie has written a bullish report on cements, and that is why we are seeing some bounce back in cement stocks. They think that the capacity addition estimate is at around 4% versus 11% in the last decade. Also, the demand growth is expected to recover in this particular year. They have an outperform rating on Ultratech, Shree Cement and Dalmia. However, they are neutral on Ambuja Cement and ACC. Deutsche Bank has written on the real estate sector. They think the worst is behind for the sector and the demand is coming back. Their top picks are Sobha, Godrej Properties and Oberoi Realty. And they also think DLF is improving its cash flow. So that is something that is looking good for the company. Last is Tech Mahindra, which has been buzzing in trade today. That is because Merrill Lynch has upgraded the stock. They have upgraded it from an underperform to a buy, have also increased the target price to 800 rupees. They think that the operating profit will witness a CAGR of around 21% over FY18 to FY21. Back to you. Okay,
as promised by Sonal, it is a very long list of brokerage calls coming in. Sonal, thanks very much for that. I'm going to wrap up this edition of Midcap Radar here. Thank you very much for staying with us, but we're going to leave you with some opinion coming in from Tahir Badshah of Invesco. Here is what he thinks of the market. We spoke with him earlier in the day.
Compared to the situation, what was about 6 months ago, at the end of calendar year 2017, when mid caps and small caps were on a roll, I think the main deterrent was basically valuations, and at that point in time, valuations were completely untouchable. Since then, we've seen a fairly decent amount of correction in the mid cap and the small cap space. The index itself has corrected quite meaningfully, and then individual stocks have done even more so. So I think now at least we are in a position to assess some of the companies that we liked earlier but were unable to buy. We'll get a fairly decent chance to build a position in the mid and small cap space for an eventual return target of 2-3 years and beyond. Pharma is still evolving. We still feel that it is work in progress kind of sector in a way, and a few things are falling into place, but not all of it. When we analyze, while the headline numbers in some of the large companies which have reported and even some of the mid-sized names have been pretty good compared to the previous few quarters, but the internals don't look as strong, and vulnerability remains with respect to pricing going forward, as well as